Today, I'm joined by Tiffany Gardner with First Horizon, and Tiffany is a UT Finance grad who has had an extensive career in the banking industry, and so we'll just jump right in. Tiffany, thanks for joining us today. And could you tell us a little bit about what you do?
Sure. No, thanks for having me. And yes, I am a UT grad. So in fact, if most can't see, but there is a UT diploma right back there. So yes, so what I do is I'm what you would call a corporate and commercial banking, and I manage our team of bankers here. And you may say, well, what exactly does that mean? So different banks will slice and dice customers. And so commercial at First Horizon, commercial and corporate banking are clients, businesses whose revenues are over 30 million and up. And so what we do is we are talking with these businesses. We are discussing what their financing needs may be, whether it be equipment debt, term loans for buildings, financing lines of credit for their receivables and inventory. But then we also work with their day-to-day cash as far as what we call treasury management or cash management. And so really what I do for the bank, like I said, is I actually handle a group of customers, but then I also have a team. There's a team of 10 of us that work with those clients. And we are kind of the primary, as a relationship manager, kind of the primary quarterback of the bank to the client. And then I then work with my business partners and my team around saying, okay, they want to borrow some money. So I bring in our portfolio manager and we talk through the debt part of that. If the cash management or the treasury management, I have a lady that I work with, and she here in Knoxville, who comes and we talk through, the cash inflows. How do we speed today? Just movement of the money. And so that's really what we do day to day.
Is this are some of these things functions that some of the biggest corporations would actually perform in-house, and and smaller companies are outsourcing to the bank, or is that kind of how this works?
You still need a bank, right? Because you've got cash that you've got to put in. And yes, there's fintechs and all, but guess what? Those fintechs are still at this point using a bank somewhere in the background. Because that, at this point, the way the laws are, that's how money moves, is it's got to go through the banking system and the Federal Reserve System. And the banks are your way into the Federal Reserve System on movement of money. And so, irregardless of the size of the company, they are using. Now, again, a very small business may go online and say, hey, I need to borrow, like a lending tree. I need to borrow, $20,000 for my small business. Well, they may go to Lending Tree and they may borrow that money, but Lending Tree is still a bank, or if they're not, then they're using a bank in the background because you've got to move that money through. So, but we have not really seen that being outsourced at this time.
Gotcha. So, and then you talk about kind of this relationship with the client or the customer. So for an individual customer, how much time are we talking about? Are we talking about like daily touch points, or weekly, or monthly, or what does that look like?
Sure. I would say a lot of that depends on the client, right? And it also depends on what's going on. So for instance, when I think about some of my larger businesses that I deal with, let's say a company that's 150 million in revenues, they have a business to run. And so I'm typically not necessarily dealing with the CEO. I'm usually dealing with the CFO or the treasurer or the controller. And, those aren't daily touch points with them. That might be quarterly, might be every 6 months, really depending on what they've got going on. Now, on the debt side, the debt is usually, it's a one-time thing. You're working on that, and you may not talk about or touch maybe a new loan every couple of years, right? Unless they have a line of credit, you're touching that once a year. Now, what I would say is, though, that from a day-to-day communication, our client specialists on our team and our business service center, that day-to-day treasury function, there are a lot of folks in the accounting groups and the treasury and the cash management groups within a company that they may be talking to our bank, every couple of days, because while they can see things on their online banking, they have lots of data coming from us, depending on how extensive that they've asked us to be set up with them on pushing them information. There could be things that they, maybe see online, but then they need additional information that maybe is not available. They may call our client specialist. So I would tell you, it depends on where it is in the organization of that company as to how often who within our team is talking to them. But from a, relationship manager or the manager that I am, dealing with, the controller, CFO, that's usually, we always have at least semi-annually, I'm meeting with all my clients. There are some that I will meet with quarterly, just because you want to see how is this last quarter, what's going on. Again, even if they don't have any big projects or anything, it's just a good touch point. And a lot of that is directed by the client and how often they feel like they want to meet with the bank.
Yeah. So, and you talk a lot about how it's going to change from client to client, but I imagine the whole idea of commercial banking is also going to be different from bank to bank, right? I mean, First Horizon does one thing, and then Bank of America or whoever does another. So how does this type of service differ across banks?
Sure. And so here's what I would tell you. So, and I worked at Bank of America I started my career at Nations Bank at the time. It became Bank of America. And so as banks have gotten larger, so you take Bank of America as a good example. They are, as large as they are, their scale and size. So where they're a little bit different is their commercial banking may be defined as 50 million in revenues up to 250. And then they may have other stratifications that they put into place. For instance, they have a lot more what we call industry verticals because just, again, think of their scale and size. So healthcare, for instance, they have a whole industry vertical for-profit healthcare. They also have a whole industry vertical for not-for-profit healthcare, right? At First Horizon, not-for-profit healthcare, I handle that here in our market. And for-profit, we do have an industry vertical because for-profit is a little bit different than not-for-profit, not just because of the name, but there's a lot of differences in the way that the balance sheets look at those hospitals. So that's just a slight difference. The other thing I would tell you is as you go smaller within an institution, so let's take a Home Federal, for instance, which is here in Knoxville, or First Bank, Clayton Bank, a couple of the smaller, what I call community banks. You have folks there who are in my role as a relationship, and they're handling everything. They're handling commercial real estate, income producing like apartments, things of that nature, people who are building subdivisions. And they might also be handling, some large healthcare facilities.
You describe your work as part of a team. So I think you said there are 10 people in your team. Is that right?
Mm-hmm.
Okay.
Yes.
And so what are the various components of that? Who are the people on your team, and what do they do?
Sure. Yes. So our primary team is you have the relationship manager. You have myself who manages everybody, but then you have a relationship manager, and the relationship manager is that person that's day to day with the client. And when I say day to day, they're the more face. They're the ones that interact with the client, the controller, the CFO on a more regular basis. Then you have our client specialists who are really our what I would call sales assistants, and they're the ones who the teams that are at the clients, the accounting, the cash managers, whatever may call them from time to time. They're the ones handling a lot of those day to day issues that come up. Hey, I've got it wrong. Can you help me with this? I need to set up a new person in our wire system, or things of that nature. Then we have what's called a portfolio manager. And you'll hear the term portfolio manager used in a lot of different industries. Like I think about it on the wealth side, right? And investments is very different than what we do at a bank. And so portfolio manager, at least in the commercial world, They are the person who is, we've got 160 relationships. So, and we've got 3 portfolio managers, and they're working with our clients and saying, okay, we're monitoring loan agreements. We are, anytime there is the debt side that we're bringing in, like we're putting out they're going to make an acquisition. So we need to finance and put together a facility to finance that. Well, that's where my portfolio manager and myself, we're working together along with our credit analyst. And our credit analysts are the ones who are doing that basic underwriting and saying, okay, we're taking the financials, we're running all the ratios, we are putting together what we call the write-up or the story about what's going on with this company, why they want to borrow this money, how are they performing in the industry, comparing them, looking at their projections. And then again, so those are the kind of the 4 functions within our team on how we handle. And then again, there's other teams that then come in, like our treasury team, our international team that comes in, but that's the primary team that's working with the client on a more regular basis.
So then, if I think of one of my typical students that desires a career in commercial banking, and of course they may have aspirations to ultimately be in a position like yours and kind of see the
Right.
top of all of this, but that's not where they're going to start. So what are some common entry points into commercial banking, at least as
Sure.
sort of the way you define it?
Yeah. So right now, how you would is it would be an analyst, right? And so you would come in, learning on the ground within our team. So you have folks, and again, different banks do it different ways. The banks used to all have these training programs where they would take students. That's what I went through, and we were analysts in a group, and we were kind of working with these various teams across the institution. Well, now a lot of the banks have gone into where they've said, okay, we want to put the analyst embedded in with the team. So you get a little bit more enriched learning process. So you're not only just sitting there in the back room, crunching the numbers, figuring out the ratios, putting these write-ups together. You're actually, like on our team, our credit analysts actually meet with the clients when we go out and meet with them. So they do, but not all banks do that. But we have found it's very helpful, and you're learning. And that process can be anywhere from 2 years to 5 years, depending. We find that some folks really like being analysts and may not want to move into a portfolio manager role or a relationship manager role. That's really where you've got to start. And I know, for me, I tell a lot of folks, I'm in finance and I'm in banking. My dad's a CPA. He owns his own firm. I did work for him. And I tell a lot of students when I come out and speak to them that, look, accountants, you're the ones who put all the numbers together. Finance people, we get to interpret it. We get to do all the fun stuff, and we don't have to sit in the back room for, years upon years upon years, right? I saw the path, as you can tell probably from this interview. I am a little more expressive. I like to get out in front and talk to people. And so the thought of being in an audit department for 5 years, I was like, have more people interaction. So to me, and gives you into an analytical role, but you can still have ways where you're utilizing and knowing, hey, I'm going to be getting to be able to meet with clients and be part of a team and working through that.
Yeah, so I mean, there's certainly all types of skill sets and aspirations among my students, and there's going to be some who are highly analytical, sort of from the start, and they want to just sort of be behind a screen and crunching numbers all the time, and then there's others that are super relational, and they want to be very client facing all the time, and sort of talking to people. But it sounds to me like what you're describing is, regardless of kind of where you are and where you want to be, you really kind of have to start at the analytical side, and so folks that sort of don't want to be in the numbers or whatever, they're going to have to go through that. Is that sort of the way you see things?
I do.